Good morning again, and welcome to our panel on crypto trading, finding the evergreen. The rapid rise of cryptocurrencies has in some ways changed everything, and it continues to reshape the landscape of online investment. While this volatile asset class offers incredible opportunities, traders must remain mindful of the essential aspects of successful investing. In this session, our crypto industry experts will let us in on all of the secrets, insights on what's really moving the market, strategies for diversifying and finding the next big mover, and how to avoid getting rugged. They will talk about selecting a broker, accessing liquidity, and realistic risk management scenarios. Our moderator for this panel is Mr. Key. He's a parallel entrepreneur. We have such a wonderful panel here, building and supporting the next billion-dollar startups. Founder and CEO of Key Difference, an accelerator and venture capital firm. He has been in the blockchain space since 2013. He focuses on building fundamentally strong businesses and moving Web 2.0 value to Web 3.0. He continues to hold many strategic positions and is a sought-after speaker and advisor in the crypto sphere. He's based here in Dubai. Next is Wael Makaren. I hope I do that all right. Not bad. He's the financial market strategist lead at Exness, a certified investment management analyst via the Investment and Wealth Institute and the Wharton School at the University of Pennsylvania, and an associated member of the Chartered Institute of Securities and Investments. He's a frequent guest on TV shows where he explains his vision of the market and is often quoted by the Wall Street Journal, Bloomberg, CNBC, NASDAQ, and others. ShunYet Jan, welcome, is the head of derivatives business and institutional sales at Bybit, one of the world's leading crypto exchanges. With over 2 decades of experience in financial markets, he has a proven track record. He's worked everywhere. I see you visited. This is a wonderful CV. He's been at Goldman Sachs, head of ETF trading, index arbitrage at Morgan Stanley and JP Morgan. In Asia, he worked in algorithmic trading at Merrill Lynch and at Barclays before driving. That's just about everyone. Still a few to go. Before joining Quad Eye and Tower Research Capital, where he rose to head of Asia. He oversees derivatives trading at Bybit, institutional sales, and strategic initiatives to enhance market liquidity, optimize product offerings, and drive adoption of Bybit's innovative solutions. So welcome to our esteemed panel. Welcome, DGens, right? To the crypto panel. Let's get started.
Hello, guys. It's a great morning. Anyone on the periphery, if you want to be in the hottest topic of the space, join in here. Crypto and blockchain has been taking the world by storm, and trading in the space is the most profitable thing that you could be doing right now. And I'm super excited to be with amazing guests, people I've worked with in the past, spoken with in the past, and I'm a client of your exchange as well. So
thank you.
Super happy to be moderating here. Let's start with the most important definition. What is an evergreen trading? Because everybody is out there trading, trying to do things. A lot of people are venturing into the new markets that's coming here. But then there are a few things that are always evergreen, few things that doesn't change. And we need to identify what that is. So would you say evergreen is in terms of an asset, a particular asset that you'd be trading, or is it a particular strategy? Can you help define that?
Hello. First, good morning, everyone, and thank you for being here this morning. And pleasure sitting with you here, guys. For a trader for more than 15 years, there is nothing that I can call evergreen. With all the headwinds that you face in the markets, there are a lot of things that change. We're in a fast-changing market. The essence of this market is the rush of change, that any factors can change the market. Whether it's the impact of an asset, whether it's you personally and how you can abide by your strategies or whatever. So finding the word evergreen and really sticking to something that always works, I don't think that's really fair to describe what we have in markets. However, we can always try to aim and improve our strategies, the way we do things, looking into certain instruments that don't have a lot of surprises for us, and by that we can reach some sort of this evergreen that everyone could be thinking of.
Amazing. What are your thoughts?
I think it's an interesting topic because, like you said earlier, no strategies are evergreen. Anytime a strategy becomes more mature, the strategy doesn't work. So the most thing that you have to do is risk management, and how to risk management, how to diversify, how to manage your entry and exit so that you're always safe and you survive. People who are successful traders, they last a long time, and that's the evergreen strategy, understanding risk management.
I think in the crypto space, if you take a vacation for 15 days, you come back, a lot of things would have changed before that. So you're right with your perspective on the evergreen. So let me ask you this. What are the strategies that you recommend or that you really like in the trading space within the crypto world right now?
First, I want to highlight on what ShunYet also mentioned about the people who stand last when it comes to really going into trading performance. And this is something that's going to start my next answer with. A lot of people would show up just to think that there's this holy grail strategy or something that they can follow that they'll always make money. But it's not the case. When it comes to strategies, one of the most familiar is dollar cost averaging on certain instruments. However, in the crypto space, it's very tricky. If you've been doing dollar cost averaging on Bitcoin, on Ethereum, or on the big names, yes, you can. You have made a lot of money. But also you could, because there are a lot variety of projects and there are a lot of things that maybe you could misunderstand, or maybe you could be in the right, in a different spot where you would be dollar cost averaging on something, but in the end it doesn't move. Like dollar cost averaging, if you want to follow it, you need also to do it on like big instruments, like when we do on SPY or any of the main indices of good economies, and also if you want to do it on the big names in crypto. But it doesn't always need to be the same. In order to do DCA and for it to work, we need to highlight on the big guys. And when you want to be more on the risky side, yes, you need to go fetch for small projects that could really 10x or 100x, and by that you're stepping into a different zone of risk, and by that also you have to make sure that you're not using the same capital on this strategy like the other. For me, I believe having different strategies and doing constant optimization is the key in order to maneuver with markets nowadays.
I think that's a very good point, because it's not just a matter of focusing on the technicals, but here you have fundamentals. You cannot be trading, DCAing a meme if it is just on its way down. So
and it's not only like in crypto imprecise, it's not only technicals and fundamentals. And you know that, like there are a lot of things in the crypto space. When we speak, this is one. And when we speak about currencies, for example, you're the euro, dollar, whatever, you have a central bank, you have a people behind it, whatever. But when it comes to crypto, anytime anyone can create any project, and they can do plenty of marketing and that, and to a certain where you feel, yes, it's legit, and you would be putting your money and investing and circulating some strategies about something that it might not move because someone didn't pump it or didn't put more money in it.
I think that's the risk and reward in the crypto space. It's a small market. It's less regulated compared to the traditional market. So not everything that's on an exchange is Bitcoin standard. But that is also what's giving up the smaller volume compared to the traditional markets, giving us the higher rise. And I think over the next many years, with institutions coming in, it is going to go lower. And I'm not sure if it's going to be as exciting as the previous cycles have been moving forward. But it's an interesting turn that we're going to be seeing in the next 3-4 years in the current Trump's administration, I guess, hopefully.
Yeah, it could be. But for crypto in precise, there is something, because there's no barrier to entry. So for example, if you want to compare crypto to stocks, in order to take your company to be listed, you need to pass through a lot of things in order to access the money. But when it comes to crypto, how many cryptos are being made every day? And when it comes to the money that could be invested in this crypto, it's not infinite. So you have a certain amount of funds, but you have an X amount of crypto that's being created every day that they expect that this money would funnel into it. And this is, from my perspective, it's one of the trickiest, most mysterious ways that really highlight the crypto space overall.
I think I have a very good question for you from a Bybit perspective. He mentioned that the barrier to entry for a project is lower, but I also believe the barrier to entry for an individual user is extremely low, because if you go to the Forex space and you ask someone, they say they're a trader by profession and they're trading. But if you go to crypto world, literally everybody, he's doing whatever random life business job, but they're all trading. So the people trading in the crypto space, majority of the people in terms of numbers, they're just normal people. They're not traders by profession. Crypto has a deeper penetration more than any other asset class in the world. How many of them are trading gold? How many of them are trading Forex? But how many are trading crypto? The percentage of those new people who are not professionals are very high. What is your perspective on that and how it affects the trading situation?
Well, so you are correct here. The crypto market is more retail driven versus any other market. If you look at a lot of the FX market, it's dominated by a few institutions. So if you look at a lot of the volatility and the movements, everyone's like, oh, these whales are doing this, these whales are doing that. No, 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 no. It's actually retail that determines where liquidity goes and what the direction of the space is. And I think what's feeling is that the crypto, because of the extreme volatility and interest in the innovative technology, it sort of captures everyone's conscious and says like, okay, I want to be here, I might have missed the dot-com boom, I might have missed another boom, but I want to be here for the crypto boom. So that's why we have a lot of new entrants. And then right now, to be honest, you do have some institutions in the crypto space, but those are more market makers, not real institutions. So that's why there's still a lot of opportunities for retail to make money. And there's certain strategies that you can never actually run in the traditional space, but you can still do in crypto. One example is basis trading, where you just sort of buy spot short futures and earn interest. If you look at that in the traditional world, you just make sort of Fed funds plus a few bips. In the crypto world, you can make 10, 20% a year, almost risk-free. So that doesn't exist in the traditional world. So I think because the institutions haven't really come in size, this has become a very interesting way and more democratic way for investors and traders to come in.
So what do you think is going to be an impact when more institutions are coming in? Because they're coming in the next year, 2025, 26. How does that impact the trading? Do you expect something positive, negative out of it, or should someone be cautious about it? What changes?
Like I mentioned in my previous answer about the money that flows into crypto and how it's affecting it. And now ShunYet also mentioned that mostly retail, that they drive the move. So imagine more and more funds are really coming inside. But what you can be afraid of when institutions come in at a time, yes, they are at a time could be supportive, whatever, but also you should be afraid from cornering markets. And this is what I believe is going to be one of the trickiest things to deal with in the crypto market going forward. We've seen when spot ETFs for Bitcoin were introduced, how also the mentality has changed over Bitcoin itself. We've seen how we rallied from almost 40,000 top. We've seen how fund managers and others, they're also advising people to flow their funds further. And by that, we've seen a lot of action similar to the DCA that a lot of people would do on SPY. It's being done on BTC. And this has been clear if you follow, if you check the patterns, how they are evolving, if you look into volumes, how much also the active volume is declining. So this also shows how institutions really are impacting this space. I believe they could take it into new strength and into new heights, but also for some retailers, it would be tricky at a time because there isn't a proper fairness, let's call it, between the action that could come from retailers and those from institutions. This is what some retailers would suffer on that.
Interesting. So you are leading the institution side as well as a department. So I want to hear your thoughts.
Well, I'm going to give a little bit of insight because I see the institutional business. It's interesting. Bybit's been around for 6 years, and half of the institutional clients signed up last year. So the institutional demand and backlog is huge. I think it's, regulatory clarity potentially from the US will change everything. And what do I think about institutions coming? It means that cryptos are maturing. That's a good thing, right? There's more regulatory certainty, and there's going to be good and bad. One is that with more institutions coming in, there's more money coming in. So whatever traders and investors are there, you're probably going to see a sustained rise in asset values. But as institutionals come in, they're probably more rational, and then you will see a decrease in volatility. I think one of the reasons a lot of people were attracted to cryptos in the beginning was volatility, good and bad. I think as things get more mature, volatility decreases. So we might see long-term volatility decrease in a lot of the more mature crypto tokens and coins.
I think now the question is not just institutions, but even governments. More and more governments are starting to hold just the Bitcoin, and some of them Bitcoin, Ethereum, and I heard Bhutan is also holding a few more. So it's going to be an interesting turn of events in this year. So let me ask you one more hot topic that's here. Let's bring that in the mix, the AI. What are your thoughts for AI working with the trading and the traders? Because we are seeing certain AI agents that's helping with the trades or managing funds or trading. We're also looking at certain AI-based tools that's helping and guiding retailers to understand the market. So do you have any thoughts, or do you think it's just for fun?
Well, of course, AI would help a lot, but the issue is the misconception about AI. A lot of retail traders, especially since we're speaking about crypto and we know that mostly the retail traders, a lot would think that AI would just give them the way or the source just to get into a certain system or a bot, whatever, that would do everything for them and really just like make a couple of % every day and just like sitting here. If that's the case, then everyone would make money, then there's something wrong in the markets because markets didn't work that way. So this is the misconception that's being out there on AI, and we're seeing a lot of promotions, unfortunately, on social media and other platforms where some people were just like, okay, we're promoting AI systems and softwares in order to help traders, but in fact, it's not as easy as you could look. What AI could help is, yes, studying more, making fractal study more easy, trying to find some sort of patterns, aggregation of news. Doing these AI tools would help, but in the end, taking the decision to trade and for AI to be really accurate on making these decisions, it's still not easy to have, because let's say any of these projects, small projects, if I'm a guy who has like a few millions I want to push into some of the projects, and then at a time it's very hard for AI to expect this type of decision that I might take, especially that it's not coming like as a habit or something that's repetitive where the AI can build it on it. So it's going to be very tricky for AI to really have a high accuracy rate on decisions. Yes, it could help traders into consuming a lot of information and simplifying it for them, but it's not as easy as some people could think that could make you money by day and night while you're sleeping.
Whatever you say, you're not going to stop the retail from thinking that. Retails do expect that, irrespective of what we say. But that's a journey. That's a learning journey in the crypto space. You got to burn some to learn some to be better. Yep. So what are your thoughts? Is there any AI integrations in Bybit right now?
Well, so I want to always be honest, right? So there is AI tools. What are AI tools good for? They are tools. They're good for you to guide you, to recommend things to you, and you can reach to a semi-professional level very quickly. We do have tools that can help you trade better, but like I said, it's not going to learn to make you money. You're not going to sit there. If you look at any prop firms, they've been doing AI. They didn't call it AI. It's called machine learning strategies. They have multi-factor models that train on huge data sets and make money off this. So if any retail person was going to use an AI tool and they're going to make money long term, it's not going to work. I hope I don't get beat up when I leave here, because there's so many
this
AI.
Is reality. This
AI
is reality.
Here.
They have to face it. This is reality.
Yes.
And misguiding people and traders about that, it's an issue. There are a lot of people who are charging tens of thousands of dollars just for systems that are AI based, but in fact they're not really a proper added value for that. It would make traders' life better,
yes,
to assess stuff, but it doesn't guarantee you making money.
Yeah, it's a tool. You should learn it. You know how to use it. And some tools are better than others and help you trade better. And they can maybe reach your goal of making money, but it's not going to make money for you.
And in the end, if there is something that's always making you money, ShunYet mentioned something at the beginning. When strategies are mature, they fail. And if there is a system that's working and it's being filled, then we're reaching singularity, and singularity doesn't exist in markets. So that's why everything, and the jackpot would be failing those movements or failing those AI fractals that's been happening. So that's why it's not as easy. Yes, we're very optimistic about how things are easily built. For example, I've been doing algo trading for almost 8 years, 9 years, and when I started, it used to take me a lot to create a bot. But now with the help of AI, some libraries, whatever, it's way easier. And also backtesting some strategies, it's way easier. So I'm easily being able to optimize stuff, backtesting data, checking which strategies might work or not. But in the end, there's a risk that you have to take, and it's always there. At any time, I might get into the market based on any AI thingy or any tool that I might use, but there's something that could happen on the other side. There's a saying that would say from traditional markets, at a time where I can, if I'm an oil trader, and at a time where I can really expect when an oil tanker might burst or whatever, then I would be able to really make money without losing at any time. So this is also, we have to link this reality to AI and not being over-optimistic on something that might just yes, it's beneficial for us, but it's not as we expect.
What are your thoughts on the index trading? Because in the crypto world, index doesn't really exist as much, but CoinMarketCap has created a new index recently for the top CMC tokens. But I also see certain exchanges do have a set of tokens bundled under a category which you could buy in the spot, but it still doesn't work as an index. You're not trading the whole batch. You're trading them individually. It's just grouping it for you. Do you see an opportunity to actually have an index? Okay, right now AI is hot. There are 10 AI tokens, but you're just buying an index token that actually represents the combination of those assets. You can buy and sell it because that entire category is going to go up and down. Do you see an opportunity around index in this space in the short term? Go ahead.
Okay, I think short term, no. Long term, definitely. If you look in traditional markets, most of the volume is actually on index products. And that's because these index providers have been around forever. And they're different from the exchanges. So, you never have a New York Stock Exchange index. It's an S&P index. It's, I mean, NASDAQ has its own index, but most of the most popular indices, like MSCI, all these other ones, there are a separate index provider that provides this. And I think right now, a lot of the CoinMarketCap's, as you know, owned by Binance, and Binance wants to launch its own indices. BitGet wants to launch its own indices. For indices to work across all exchanges is the first step that needs to happen. And there are certain providers out there, I can't name names, but I think that's going to happen. But one of the other things that's stopping indices from becoming popular, except for small sub-segments, is the dominance of Bitcoin. If you look at the S&P 500, there isn't one stock that controls 40–50% of the index. What do you need an index if Bitcoin and Ethereum are the biggest market, right? It's like Bitcoin, Ethereum, Ripple, Solana. I mean, you just buy those four, you don't need an index. So I think as the dominance of the big tokens gets smaller and smaller, the index value becomes bigger.
Exactly. This is very, very true about, like, for example, now if you want to look at indices in crypto, like how we can create, it's the big names that they are rallying as if they're, and also there's the Bitcoin dominance. So if you can look at Bitcoin dominance compared to others, also you can look at that as if it's a sort of index. But going forward, if indices were introduced, it's a very good step for crypto market, and I believe bundling a lot of good projects together that could have the same market caps, let's call it, and really promoting it to investors who are willing to take certain risks and make sure to get some sort of guarantees on the downsides, at least just to try to really protect investors at the time, because we know how things can go wrong in crypto projects. So by that, you could introduce this new product to a lot of retail that are really interested to make proper investments in the crypto space. But for them, they don't know which, it's like ETFs or any funds that you're investing in, bundle of stocks or certain sectors, whatever. So also this could be done, and I believe if this reaches a good mature stage, it will bring a lot of more institutional money into the space rather than only retail.
What do you think is going to happen with CBDCs? Do you think trading against CBDCs, is that a possibility or is that a problem for some exchanges? How do you see that?
I don't think CBDC would cause any pressure on normal crypto trading that's been happening now. It's not competing. When it comes to CBDC, for example, today if you're holding euro or dollars, whatever, and you want to buy Bitcoin, it's either, and let's go, you want to buy spot Bitcoin. You need to convert into, for example, USDT, let's say, or take an extra step in order to have these. When you have CBDC, CBDC is the same as if in values first, in valuation it's not going to change. You're just having a digital euro, you're having a digital dollar, whatever. But it would also make you or give you the easier option to invest in crypto. So it's not competing, because similarly now, for example, you have FX, but also you can invest in stocks. So you can have a central bank digital currency that acts as if the old fiat, but also you have a lot of projects that you can invest on, which are the cryptos. So I don't see them competing, but I see getting into CBDC will give more maturity into the crypto space and all. But still, there's just this room that's always cutting a lot of hopes in crypto, and it's really one of the downsides is that there is no barrier to entry, and there's always like a lot of projects that could flush, pushing experience, like user experience, into ways that we don't want. So if traders or users, they're not having always, like, we don't want to call it always a evergreen experience, but at least something that they don't feel they're always rugged or played on. So I believe this also would help. But of course, CBDC doesn't compete with, they don't compete with crypto trading.
What are your thoughts on CBDCs from an exchange perspective? Because that requires different licensing terms, I would assume, to operate. So do you have any thoughts on that?
So we want to do what our retail wants, right? And right now, our retailers are comfortable with stable coins and then becoming customers of Bybit. And Bybit is getting regulated in more and more jurisdictions. We have lots of lawyers now, a lot of compliance people. And if CBDCs take off, and this is a way to drag more retail, and more retail trust CBDCs versus the current stable coins, that's great. So it's actually great for the industry to have CBDCs involved. And the funny thing is that I think stable coins have become so mature. You say 2-3 years ago, there's all these articles attacking one stable coin or another. Now they're so big, they're so profitable. They're more transparent than anyone else. We welcome more CBDCs.
Yeah, so the CBDC would compete with stable coins rather than other coins that are there, because now if there is a CBDC, I can just transfer my dollar into something else. Why would then I need to buy Tether or USDC or any other coin? So this is the real competition, but not with any other projects that I'm investing in for a sort of volatility or returns or whatever.
Is there any automation tools at all? We did cover the AI, but is there any automation tools at all that you would use, that you would recommend, that you like, that you believe is helping the trading process and your trading activities?
There are plenty of tools, but like for example, for us at Exness, when we create reports, especially about Bitcoin and Ethereum, we rely heavily on Glassnode. They do a really good job when it comes to having good information about the crypto markets, and I believe a lot of people could explore still more on that. We're trying the best in order also to improve the education when it comes to crypto, because a lot of people are still away from the reality of crypto, from really understanding fundamentals and all that. So I believe Glassnode is one of the tools that personally we're relying on.
What about you?
So I think a lot of these AI tools, we actually use them internally quite a bit. It's just to scour public information on the internet or in X or in other platforms and try to make sense for it all. And we try to make sense of it to see what, if there are certain trends from our competitors for certain token projects, to see if, the token projects actually has real, involvement. And also I think we're trying to give those tools to our retail to also use that as a research function. So I think once again, AI is an amazing research, amazing tool that you could use to help with your strategies.
So you shouldn't ask ChatGPT whether you should buy Bitcoin or sell it, because it's gonna.
But you could ask ChatGPT what's the most important news happening right now in this,
So for a lot of people moving from Forex and other commodity trading, entering into the world of crypto trading, there are a few obvious pitfalls, few obvious things that they should know about. There are token unlocks, the nature of a token, who is behind it, the news, the politics, the regulation affecting it. There are quite a few factors inside the market and outside that affects it and that impacts the trading. But what would you say, the top 3 things that they should keep in mind when they move from any other form of trading to crypto trading?
Of course, they need to in order to not to fall into a lot of schemes that we fell into when we first started trading. And investing in a lot of projects could go wrong, despite there's always new ways for scammers or ruggers to just beat you. So always you need to do your homework. You need to understand who's behind the project, really understand what they are doing. Make sure always to have a proper utility with things that you're investing on, and always risk whatever you just can afford to lose, and not just go all in and feeling of missing out, just ruining whatever funds that you have.
What about you?
Yeah, so I think one of the big differences is that there's a lot of tokens, right? If you look at FX, the currency pairs is a lot smaller combination, and they're backed by a country. So, the research you need to do is well, I know this country, I know it exists, the currency is okay, right? In a crypto, because, the barrier to entry for, new launches is much lower, so there are more shady participants inside. Now, the large exchanges do sort of weed that out, But sometimes you miss the opportunities. But if you go to any of the big 3 exchanges, most of the tokens we list, we do a very good due diligence on every one of these projects. But sometimes a lot of the new entrants want to say, wow, my buddy told me about this token, and that only lists on a smaller exchange. So I would say, extra due diligence, as you said, on any new projects you're not familiar with.
And again, doing all these doesn't mean that this project will outperform. But this project could be legit, they do the due diligence listed there, but it doesn't mean that if they're listed, they will always go up. There could be, if there's a good project, yes, but also doing this is something that you need to do, it's the ABC, but making money out of this, it's not always also guaranteed because there are a lot of other factors that would really affect the performance of the project.
So as a good trader yourself, would you open yourself up to a copy trading platform for others to copy you?
Copy trading is really good, especially like at Exness, we have social trading platform that we have a lot of traders coming in. Usually social trading or copy trading helps with those who really don't have time, for example, to trade. They don't have enough information to trade, but also you have to put strict rules on who can really do strategies and allow people to follow them. For example, at Exness, there are a lot of things that you need to pass through in order to be able to create a strategy so people would follow you. Because in crypto space, we know how volatile the market is. And also, I tried a lot of copy trading stuff when it comes to crypto. Then it was going up, and then it goes boom, because the guy gets excited, and then he starts pushing, and then whoop, it wipes out. So it's very important to, it's nice, but also, unfortunately, you can't control the behavior of the trader that's following. So you need to control at least the return by putting proper risk management around it, certain funds, risk certain funds that you don't care about, or set certain drawdown metrics.
I don't know how it works in traditional copy trading platforms, but in the crypto platforms, you can actually see how many times they reset their portfolio, been liquidated, restarted. It's usually in hundreds.
Yeah,
That's crazy. So do you have something to add to it real quick?
Yeah, so it's really funny because 2 weeks ago, I also became head of the copy trading team at Bybit. So I think copy trading is sort of, you're like a fund manager, except you follow it. And a fund manager is the same thing in TradFi and in cryptos, that you sort of have to understand what the copy trader is doing, what his strategy is, and I think that information isn't as disclosed as it would be in a traditional world. But there are good copy traders out there. It's just the hard part. I believe in the concept is that you have to, once again, you have to do the work to find out if this strategy works long term. If he's just a simple monthly trader, is being lucky.
Guys, we had an amazing conversation with great insights. Please study, take your time, understand the market. This market is different, but it's exciting, it's powerful, it's the future, and it needs patience, persistence to make yourself successful in this. Let's have a great 2025, guys. Thank you so much.
Thank you.